All right, so I'm having this quarter life crisis, and I was looking at flight tickets, and I thought, I should go to South Korea again. It's gonna be my third time this year, and I thought that it was gonna be a nice solo trip, and I'm gonna be flying in 3 days. Okay, so of course I'm going to be ensuring that I would still have videos out for you guys. So today we have to talk about earnings that actually happened. But chances are, when you're watching this video right now, it's most likely already way past earnings, but I thought that we can still talk a little bit more about earnings because not all the earnings are over, okay? We're still in earnings season. So let's go through some of the earnings and just basically just how the market is kind of going through this whole entire earnings season. So first off, we have to talk about last week when Netflix came out with their earnings alongside with Tesla. Netflix actually beat on their earnings pretty wildly. Netflix actually came out and just destroyed earnings, coming out on top, soaring about 14% in the after hours, basically beating on expectation on people who actually signed up to the Netflix subscription. So clearly the password sharing kind of lockdown was really working its magic. Tesla came out with the earnings. I already made a video about Tesla earnings, more so the earning call, but kind of went through the earnings slightly as well in that video. If you have not checked it out, it's going to be up here somewhere for you guys to click on. Afterwards, we actually have Meta Platforms coming in, going through with their entire earnings, which, safe to say, it wasn't really a good earning, to say the least. This was the first earning that we actually got for us to actually look at the MAUs, which is the monthly active users on Threads, which is a Facebook, Meta platform created Twitter copycat sort of thing. Okay, and it wasn't doing fantastic because the monthly active user was about 100 million users. Of course, if you were to just look at numbers alone, 100 million sounds like a lot, but let's be honest, Snapchat alone is doing 400 million monthly active users for a very long time now. So, if you're not even beating Snapchat at this point, I'm not sure what you're trying to do, and I'm pretty sure that Twitter is getting way more monthly active user. Nothing is changing. Threads is not really changing anything new. Okay, and between you and I, let's be honest, we have our Threads account and we have not posted anything at all. Okay, we probably went to our Instagram, and of course, if you're not following me on Instagram, link down below. And chances are you created your Instagram 10 years ago, and then afterwards, when Threads came out, you just click on the button, you have a Threads account, and then you just left it as it is. You're not using Threads. Threads is not interesting. So that aside, Facebook basically came out with quite a bad loss, I guess. They actually went down about 5% in the pre-market. Google, Alphabet came out to actually have a sell-off of about close to 2% after coming out with their earnings as well, because the cloud figures was not actually fantastic, especially for Alphabet. They actually earn a lot of money from its cloud computing. Okay, of course, alongside when we're talking about cloud computing, we have to talk about Amazon with their AWS, which is Amazon Web Services. The only thing that is good about Amazon, to me, Amazon is only worth as much as what Amazon Web Service is, and Amazon Web Services is not really doing that well either. But of course, nevertheless, it just missed by its expectation by a little bit, which is why Amazon kind of just went down a little bit by about 1 to 2%. So basically, the entire market, if we talk about the FAANG stocks, the market is not really fantastic, other than, of course, the rare few such as your Netflix and such. But everyone else is not really getting that big of a, that hype of a earnings. Everyone think that this earnings season is pretty bad. Nasdaq is starting to go into its price correction territory. Okay, if you're looking into all these different tech stocks, if you're looking into your FAANG, you're looking into your Teslas, you're looking into your Microsoft, all these different companies, they're all getting destroyed. But of course, this is nothing compared to what we actually saw back in 2022 when we had destruction after destruction. Every single earnings, we just got red after red after red after red. And of course, with earnings not being this fantastic, this also brought forth even more fear, because we have central banks around the world still increasing interest rates. because just yesterday, Philippines actually came up with their Philippines Central Bank increasing yet another 25 basis point increment. And of course, for the previous month, ECB, which is the European Central Bank, also raised their interest rates by 25 basis point. So we're kind of expecting what is going to be happening in the United States, which most likely would be the same thing. Because according to the last FOMC, we already got the FOMC minutes. It actually showed quite a unanimous curve saying that we do require yet another 25 basis point increment. And so if that were to be the case, then let's be honest, then we are most likely going to be seeing yet another 25 basis point increment simply because inflation is not dead. And of course, all these different companies are reporting earnings as it is. Why are they actually failing on their earnings? Because when inflation kicks in, they feel that they are able to raise their prices according to inflated prices. And when they are unable to sell their products at a, for example, 10% extra margin markup, what happens is that they don't get whatever the sale at all, okay? Because, for example, if you're able to sell it at 100%, and you don't sell it at 100% because you think that you're able to do it at 110, now people don't even want to buy it at all. You just lose the whole 100%. You don't just lose the 10%, you just lose the whole 110%, for example, okay? And I think that's happening with a lot of different products in the market. It's not just physical products. It could be your softwares that you're using. Maybe companies are starting to be more cautious on their spending. They might think that there are some software that don't need to be renewed. Maybe some employee don't need the access to certain softwares. So that might be a good explanation why they might want to be cutting prices here and there. And of course, this would also come back to all these different companies that's raising their prices, thinking that, okay, inflation is kind of screwing up prices, we have to increase our prices, but at the same time people are not buying it. So it kind of create this false expectation that they're unable to beat. So of course, needless to say, right now they're not exactly guiding for a lower target for the following quarter, but at the same time it is fair for you to actually see that that could be an issue as well, because not guiding lower meaning that you would most likely miss again if inflation stay as stagnant as it is at the moment. So if persisting inflation is going to be this big of an issue, then maybe all these different earnings would need to start to guide lower. And I'm not gonna lie, I think that when businesses start to guide lower than what they're actually guiding right now, you are really going to see the real correction coming in. Right now, the S&P just went into the correction phase. So for me, I like to use the SPY, which is an ETF that mirrors the S&P 500. Currently, it just went into the $414 phase. That's where I call correction phase. I have a line there at 415. Anything below 415, we're starting in the correction phase. We actually danced along the 415 line quite a bit in the past, I believe, 3 months. I think we touched it, once or twice, but nothing crazy, because afterwards we basically have a huge rebound. But because of this current earnings report that we actually get, all these different earnings report from all these massive tech companies that just came in, this kind of just brings forth this kind of worry in the market, thinking that, oh, okay, hold on, maybe S&P is in a correction phase. And this is why a lot of people is starting to be more worried. And of course, you can see that even Bitcoin themselves, they're actually going upwards. Right now, Bitcoin is sitting comfortably above $34,000 per Bitcoin. Of course, they actually hit a $35,000 high just 2 days ago. Of course, chances are when you're watching this video, it's going to be about a week late. Maybe Bitcoin is all the way to 40K. Maybe Bitcoin is all the way down to 30K. I don't know. Volatile assets, not for me. But I do think that a lot of people are starting to think that maybe, just maybe, the stock market might not be that good of a place to park your money for the long run. We're starting to see a lot of different headwinds in the stock market. It's not just about companies not reporting well. We're looking at geopolitical tensions happening around the world. We're looking at all the difference in the inflationary pressure that seems to be persisting after being called transitory. We have the Fed saying that they are aiming for a 2% interest rates, and we are sitting very, very comfortably above 3%. So I don't know. I do think that the stock market is not going to be that good for a investing purpose in the next in the short term, maybe in the short 3 to 5 years. I'm still parking my money in the stocks market, but in different instruments. Maybe I'm short, maybe I'm in options, maybe I'm in leaps. I have a lot of different position in the stock market, and I'll see how it actually goes. But honestly, right now, I'm really down in the stock market as well. Okay, so you and me both. Okay, chances are you are bullish on the market, and you're getting destroyed. You're probably down like 20% on your portfolio. Hey, I get it, because from my highs of my portfolio, I think I'm probably down about close to 40%, about 30, 35, 36% ish. And I do see it continuously going downwards in the short run, like I said, in the next 3 to 5 years, because of all these different factors that I just brought up earlier. So, let's hope that the market would kind of look better. Let's hope that, maybe I would actually take it out and then put into different financial instrument. I'm not sure. But anyway, that's all I have for this video. Thank you so much for watching. And I hope to see you guys soon when I come back to Singapore. See you. Peace out.